Ladies and gentlemen, my name is Greg Michalowski from Greg Mike FX, and this is a technical review or look at the euro versus US dollar as we start off the new trading week. Before we get started, let me remind everybody that if you do like these videos and want to see more of them, you can subscribe to my Greg Mike FX YouTube channel. Also, if you want more information about trading foreign exchange and what I'm doing at Greg Mike FX, you can come to my website at gregmikefx.com. Each day I have a blog post there, and if you want to be on my mailing list, simply put in your email address right here, and I'll be sure to keep you in the loop. Let's take a look at the euro versus US dollar, looking at the weekly chart here. If you take the low going back to 2012 and the high reached in May of 2014, the 38.2% retracement comes in at the 132.47 level. We're moving away from that level after coming down and testing that level in last week's trading. The move to the downside here in early trading is left a gap. We had a low on Friday of 132.19. The high for today has come in at 132.13. We'll take a closer look at that in just a second when we look at the hourly chart. What this chart shows is that over the last 2 years, the euro versus US dollar is still near the top half, or still in the upper half, I guess, of that trading range. A key target on the downside for this pair would be the 50% retracement at the 130.16.8 level, and I think that is more of a level, if you will, that the euro should move toward. It seems more congruent with the economic fundamentals coming out of the Eurozone, coming out of the U.S., with the U.S. growth being stronger than the Euro growth, the U.S. looking toward tightening probably in 2015, while the Euro is going to keep the rates unchanged for an extended period of time. We learned that last week from the Jackson Hole Conference. So this 130.16 level is my longer-term target, as long as the bias can remain to the downside. What do I mean by that? Well, if the market can stay below the 132.47 level, remember that 38.2% retracement in trading here this week, I think the bias remains to the downside for this currency pair. I think the sellers remain in control. I think the buyers remain nervous. Last week, we moved below the bottom side trend line. The week before, we kind of consolidated here after moving lower in the month of July. So we're taking another step to the downside here, started in last week's trading and moving below this trend line. I think that is likely to continue going forward. If it doesn't, we'll know when the market moves back above the 132.47 level. I would think that the traders become a little bit more frustrated and perhaps move the market further to the upside for whatever reason that may be. Taking a look at the hourly chart, the last leg to the downside from Friday's high to the low that we've seen so far in trading here today has the 38.2 to 50% retracement at the 132.27 to 40. Remember that level at 47 on the top side. We don't want to see the price move above that. So this area right here in the yellow is probably where we're going to see some selling coming in trading here today, if the market should get up to that level. And if the market moves above the 47 level, all bets are off. Once again, if you like this review and want to see more of them, please go hit subscribe on my YouTube channel. And if you want more information about Greg Mike FX on a daily basis, you can put in your email here and visit our website at gregmikefx.com. Good fortune with your trading. Bye-bye now.